So welcome everyone. Welcome to our office. I'm Antoine Scalia. I'm the founder and CEO of Cryptio, which is a finance and compliance data platform for institutions dealing with crypto. I'm very pleased to moderate and have this discussion today. The discussion will be around the future of funds and regulated products. We have all the leaders behind the developments in that field, including obviously the recent development in the Bitcoin Spot ETF world. So I think that the best way to start, given that we have people from different firms building different types of products, different geographies, the best way to start would be if you can, guys, introduce yourself, introduce your firm, and give a little bit of context on the products that you've been building in the last few years, because obviously, you know, like these products have been existing for a few years. Tell us a bit more about these products, and we'll start from there. Maybe Jean-Marie, do you want to start?
Yeah, sure. Hi everybody, thank you for coming. I'm sorry we didn't start at 9 o'clock. Everybody complained to me already. That's not my fault. That's Antoine's fault. So 11 o'clock is the start time. I'm the co-founder and CEO of CoinShares. CoinShares was born out of a commodity shop. We were a commodity trader until 2012, and we jumped into the crypto bath in 2012. Our first adventure was to do a hedge fund. We realized it was not scaling, and from there we decided to go into a very different direction, saying, okay, how do we sprinkle a bit of crypto into everybody's investment portfolio? And this sprinkling started in Europe and took the form of ETN and eventually ETPs. And you know, today we're managing around 7 billion for our clients worldwide, and we just finished the acquisition of a US company to be able to, I would say, expand our journey from Europe to the US and propose a global franchise around CoinShares. So that's CoinShares.
Great. Tim?
Hi, I'm Tim Bevan. I'm co-founder CEO of ETC Group. We're a bit younger than CoinShares. We set up in 2019. And for us, we were the first to get through sort of BaFin in terms of getting authorized to issue crypto ETN. So Germany is very much our core market. Got a range of products, obviously very Bitcoin focused still, as the market is. But you know, Europe's interesting. I mean, we've got a 3-year track record now, and there's a bunch of very experienced issuers operating in the European market, and it's interesting to see, you know, on the innovation curve, where the direction of product and where it's going. Obviously incorporating staking returns, obviously looking at indices, but you know, the ET wrapper should be doing more than just wrapping a single asset on a price return basis. And you know, that, in that sense, you know, Europe really is at the leading edge.
Absolutely. Hey everyone, Matt Hougan from Bitwise in the US. There are some seats in the front if people in the back want to come. I promise, aside from Bruno, we don't bite, so we'll be fine. Bitwise is a crypto asset manager. We were founded in 2017, originally best known for creating the first and today the largest crypto index fund, which is the Bitwise 10. We offer 19 products, DeFi indexes, NFT indexes, but more recently, we're one of the group that launched a spot Bitcoin ETF. BITB is up close to $2.5 billion now, which has been pretty great. We serve mostly financial professionals in the US, advisors, family offices, and institutions.
Hi, I'm Bruno, one of the founders of Hashdex. So like Bitwise, we started late 2017. I remember when we were thinking about the company, Bitwise launched a little bit before us. Oh, those guys are doing the same thing that we want to do. And we actually started with a focus in the US, but quickly became clear that things in the US would take a little bit longer. So we focused more on Brazil. Today we're the largest manager in Latam. ETFs, funds, mutual funds, you know, things that look like 401k funds, ETFs in the US, well, private funds in the US, and ETPs in Europe. So I think very similar to what everybody here is doing. So I think we've had a front seat in the last years of everything that's been happening in the crypto fund space.
Cool. Let's start with the US and let's start with the recent development in the Bitcoin Spot ETF world. So obviously we've seen all the great traction since the launches of these ETFs. Who are the primary buyers of these ETF? Like which basically segment this ETF open? We had this discussion earlier. Matt, do you want to give us some perspective?
Yeah, sure. I mean, the challenging thing about ETFs is you don't know, right? They don't buy it from you. They buy it on exchange. And maybe you find out 45 days after the end of the quarter when they file reports at the SEC. So by May 15th, we'll know a little bit more. But I can tell you the groups that are buying it, and I'll tell you who I think are the primary ones. In BITB, we know that they're retail self-directed investors buying it. We know that they're financial advisors, what you'd call IFAs here, that are buying it in size. We know that they're family offices, including some of the largest family offices in the US, that are buying it. And we know that hedge funds, venture capital funds, and we actually had our first corporate Fortune 500 company start to build a significant position in BITB. So those are the groups that are buying it. The groups that aren't buying it yet are wirehouse advisors like Morgan Stanley, UBS, at least not in any sort of size. Institutional consultants and institutions, at least for our product. I can't speak for other products. I would say that if you had to like percentage it, retail is probably the largest percentage, but I don't think it's like 90%. I mean, we are having financial advisors make 3% allocations across, all of their clients on a regular basis. We track those wins, and they show up in my Slack channel every day. So I do think that professional audience is significant and growing. I think it will eventually be the majority, but probably out of the gate, there is a large retail component as well.
Cool. Bruno, what do you see on your side?
Specifically about the US, you mean? Or
but specifically about the Bitcoin Spot ETF.
Yeah, so our ETF there, it went into a different path. We always tried, we were trying different avenues to see if we can launch by ourselves. Didn't work in the end, but it's okay. I think it's a part of, how you position yourself in races like this, which is very unique there. So that one is still a small fund, and the things that we had are essentially, retail coming in. If you connect it with what we see here in Europe and Brazil, then I'd say, I probably agree with Matt that the profile is similar. You have, I say, if you look at Brazil, there's maybe 30% are hedge funds and family offices, and the rest is pure retail. And if you look at actual funds, and I think Matt probably has the sensitivity. In the private funds, you actually have a very a good grasp of who's coming in, and you can assume that that profile repeats itself when it jumps to the ETF wrapper, right? So actually, it's a question I have to Matt is actually how that played out, if they've seen that level of clients that you had in the private funds jumping into the ETFs, and if that gives you a sense.
Yeah, and I'll just jump on that. Absolutely. Actually, what we see is something very specific, which is when we were selling private funds to financial professionals, like an advisor or an IFA, they would have 1 or 3 or 5 clients who asked them for exposure. And buying a private fund is a pain, right? Accreditation, documents, it's sort of a nightmare. So for those 1 to 3 clients, they would make an allocation. But for the other 150 clients, they wouldn't. What we've seen with the ETF, or what we're starting to see, is those groups who were crypto accepting, who thought it had a place, are now doing it across book. Because instead of filling out 150 subdocs, they can just push a button. So we're starting to see that happen. I think that's going to accelerate. And we are seeing clients who owned our private funds also buy our ETFs.
Interesting. And what would success look like? So obviously, like the AUM has been growing even more than what the market has expected, but also the fees went down or like started relatively low. In a fund issuer perspective, like what does success look like? Jean-Marie, you've been in the game since the acquisition of Valkyrie. Like, can you tell us a little bit about that?
Yeah, I think at CoinShares we kind of coined this expression, which is AUM is for vanity and profitability is for sanity. And what we tend to see right now in the US is like a commoditization of the spot ETF, effectively, where it's a table stake. Nobody really makes money out of it, at 20 basis points. You make the math, Bitwise is in a great position because they're doing it on their own. If you look at all the people not here today who are joint venture project where sharing economics 50-50, the net cost of an ETF is probably 50%, of it. So 10 basis points with 2 people, even if you have like 10 billion, doesn't really move the needle. Or if it moves for you, you need to change your business because your shareholders are not going to be happy about it. So, and then you get all the people who get massive trust. The trust convert from high fees to low fees on the ETF. So the dust need to settle a bit in the US, and I believe eventually you're going to see a lot of consolidation of players in the US. Valkyrie was kind of a premonition of that. They were not about to make the finish line if we didn't step in, so it was a good entry point for us. It is very different from what we saw in Europe. We've been doing it for 10 years now in Europe. Europe was a very differently structured market. It was kind of first mover advantage in Europe. Nobody was doing it outside of Europe. Barry Silver and Grayscale was starting to do it slowly in the US, but it was very the early days. So the fee compression in Europe didn't play the same way. Of course, the fees are dropping now, and that's going to also create some competition issue and consolidation because not everybody in Europe can lower the fees to remain competitive. So we'll see how it plays out. But yeah, it's a very, very interesting time to watch in this ETF, ETN, ETP segment. And the development of that is going to shape the form of the industry for the next 5 or 10 years. So an industry where I think M&A is going to be very active.
And team, obviously, you've been also very focused on Europe. Like, what's your take on like the current dynamic in the European market, especially like fee-wise, and then what do you see today?
Yeah, I mean, I kind of echo what the guys are saying, that people overstate the speed and degree of institutional adoption, right? It just isn't there yet. So the market in Europe is largely retail. Private banks or wealth managers where they're coming under pressure from their clients, or maybe family offices with a flatter decision-making structure are coming into the market. But genuine institutional adoption isn't there yet. So there's a long way to go. And however much the market moves around or how excited we get in the crypto world, the speed of institutional adoption is going to continue to be slow and steady. There's a lot of work for people to do to get comfortable and to begin to seriously allocate assets into this sector. So that's a slow, painful journey. And the problem with crypto is you get a lot of people who are futurists, and you forget you need to be commercial, right? You're going to run out of money before you start making money in 90% of cases. And I find this with tokenization of real-world assets. Yeah, I mean, 5 years away maybe, but you're going to make money in the next 18 months, or you're going to run out of cash, right? So you've got to be very careful. You've got to be very careful and calibrate the speed of growth and expansion of your business to the true speed of the market you're servicing. And that is slower. It's much slower than people seem to think in my experience.
And do you think that regulation is the main blocker or the main element that explains that the market is slow, or is it kind of an excuse and just the demand is not there?
I think historically crypto, it carries a big personal reputational risk premium, right? So virtually every institution's got a secret lab doing loads of crypto stuff. They wouldn't publicly admit it. And it's true of regulators and central markets, infrastructure providers. There's still this big personal risk premium associated with doing anything positive in the crypto space. And that has really slowed things down. And we notice it across Europe, right? It's a very multi-speed picture. Tone comes from the top. So, in Germany or Swiss jurisdictions where the regulator's been sort of neutral and even-handed when it comes to looking at crypto, it's a much more receptive market. That tone comes down. You can have more nuanced, real discussions about investment opportunity, etc. Markets like the UK, it's much tougher because the tone from the top has been much more negative, and that filters down into the psyche of investors. So, Europe is not homogenous, which is an obvious statement, but especially when it comes to crypto, it's really quite varied in terms of the attitude and the approach from one jurisdiction to another.
What's your take on the recent announcement of the London Stock Exchange saying accepting application for ETN products?
I'd have to characterize it as disappointing and confused.
That's very British.
It is disappointing. It just doesn't make sense. The professional-only limitation versus what crypto-native organizations can do. Arguably, an ETP is the lowest risk, most highly regulated way of owning the asset, and retail are precluded. And it's not as if a regime doesn't exist. You know, there's a complex products regime into which these products could sit very naturally and obviously. So cutting off retail, I think, could be fatal, right? I mean, how's this segment going to trade? LCH are going to clear it at 100% rather than clear it properly, again, for political reasons. So you've got a capitally inefficient, restricted access market. So I'm not particularly positive, and I don't think it's going to work. You know, the old adage, either do or do not, and this kind of halfway house is just not functional, it's dysfunctional.
Would you agree, Jean-Marie, on that?
I'm going to be as pragmatic and British as Tim. Look, the narrative in the UK has been terrible for a long time. CoinShares put a question in Parliament back in 2017. The product were banned in 2019 for distribution. We still have a lot of British clients who owns our product, which are on sale only. They can't buy more, they can only sell them, which is a bit biased. In terms of like where is the market going and where is the regulator going, you know, Brexit was a promise of creating the Singapore of Europe. We're clearly very, very far away from that, either from a tax perspective or simply from an innovation perspective. So we didn't really score them. Now the government and the FCA are looking at changing slowly their stance. It's probably going to be a stage approach. Yes, the institutional qualification is not the easiest one to emphasize distribution and to help distribution and to sprinkle these ETPs across all the self-directed investment portfolio. But it's better than nothing. I don't think you will have the same success if it's kind of limited to institution, but at least if we get that, then we can leverage for the next, or push for the, or lobby for the next step. So, you can't, if you have nothing, you have nothing. So let's try to get a little bit of something, and from there we can probably push further. So, but it's not going to be as pragmatic as the US approach, where you get like everybody going live together and the market, making the choice. So it's a very, very unique approach that the UK is coining for itself.
Yeah, I mean, as operating a UK business, the only UK institution actively engaged with me is HMRC, and I still can't open a bank account. It's ridiculous. We employ 20 people in the UK. We operate a business issuing regulated securities, and I can't open a bank account. I mean, it's madness.
Yep. Well, I was just going to, sprinkle in some American optimism into this this dour UK rain shower. Everyone's like, wow, the U.S. really is moving forward, got it right. Billions of dollars of ETF flows. It was a complete disaster 9 months ago. Complete dead end, blackness and darkness, and we now like have amnesia and think the U.S. is moving, and it is. And I will just say, at least in the U.S. it changed overnight. I think the ETFs were live for 3 days before the American Banking Association went from hating crypto to advocating for the ability to custody it. That's actually true, and so it really has just made a major switch, at least in our market. So, maybe you'll get there.
Yeah, but to your point, America has this quality to be able to requalify itself even at the last minute. You saw it in mining. You guys buy in mining, and overnight all the miners flew back to the US.
Yes.
So there is capacity to requalify, and Warren Buffett always gave this expression, never short America, and in this kind of instance it's kind of proved right.
Yeah, I agree.
But
it was really dark.
By the way, I'm sorry for teams that the weather, it's not like
That's what I came for.
I know that the cash create redeem is pretty inefficient to my mind. Structurally, that could have been a better market. It puts incredible pressure on the benchmark, and I think actually opens the door to more price manipulation than it solves. So, yeah, you didn't get it all right.
That is exceptionally true. Yeah. Cash create is not as efficient, and you can see that some of the issuers don't actually know how to do it. Some of them actually don't know how to trade crypto themselves and outsource that, and so that's imperfect. I do think we'll get there in a year or so. I just think the SEC wanted to move slowly.
Funny enough, on the cash create, I think it's a present from the banks. Because in the US, you get a massive AP business run by the banks, which you don't have in Europe. In Europe,
I can jump into that a little bit because I'm sure Matt remembers this, but you looked at the filings; they were all in kind, and there wasn't odd duck there. Ours was in cash, and it wasn't cash because we knew it wasn't going to get through in kind because.
So that's your fault.
Yeah, it's like. It wasn't our fault. It was just that we were being realistic. It was very realistic. But I would have no problem in taking over that fault. I wish I had that power, but it wasn't. It's just that we had the exact same discussion with the regulators in the central bank in Brazil. And so the banks are not touching it unless you create cash. And the SEC was telling us the same thing. So, the banks were not going to touch it. So either you come cash. And there was a little bit of a, arm wrestle there, thinking that everybody would, if everybody, held the line, the SEC would budge. And we got a lot of pressure from some of the big names calling us and saying, why are you doing this? And say, because we think this is what's going to work. And I think that it wasn't a done deal. Just because the lawsuit was there was still a lot of stuff that the SEC could have done to block it in a way, like in the minutiae of the details and things like that. So rather than, it's good enough for now. It's ineffective, but you want to be right or you want to be happy. I think we're a lot happier that it's out there, and then you start eating from the edges, and at some point this will be all as it is here in Europe, right?
And I would just add, from an efficiency perspective, we've been blown away or pleasantly surprised or pleased with the execution. I think our biggest day, we had 230 million in inflows. We executed 1 basis point above the price. Which is pretty good. So we've been impressed with the liquidity of the market.
Yeah, I think the problem is going to come on the way out. On the way in, the gates are wide open. It's on the way out, it's becoming a problem.
You assume someone's going to ever redeem these ETFs? I don't know.
Well,
there's that pessimism for you.
I'm not Barry Silbert, so I can't.
Let's talk about Bitcoin a little bit. So obviously the Bitcoin Spot ETF has like a good and positive impact on the reputation of the asset. Where are we in beyond just like spot ETF, but like where are we in the adoption cycle by institutional investors? So how far are we from, for instance, seeing Bitcoin being purchased by pension funds?
I think. So every conference that we have or discussion, somebody asks about regulation, right? And the thing is that regulation is not a monolithic thing. You have different sets of rules that you can maybe divide in 5 areas per country. So you're looking at tax, capital markets, banking, and then the pension funds specifically in most countries, they have a very specific set of rules and sometimes a specific regulator and things like that. So before you get to the level that pension funds in most countries can have an allocation, you probably need a change in the rules. And that doesn't happen overnight. So these are, I think, sometimes people are looking at the final stages. Like you're looking for the final big boss, and there's so many things to happen in the middle. You don't need, for instance, every bank to be offering crypto ETFs or products to their clients for Bitcoin to be at a level that is 10 times higher what it is today. Right? And just as, remember this, if you go to your bank account today and you try to buy, a VC fund, you probably don't have access to that or some alternative, timber or whatever. So it really depends, we don't need to have all the pipelines open and everything for it to be a big hit. And the pension funds, before that you have to convert the single family offices, the multifamily offices, the hedge funds, which are still, very small. Then you start going into, different, more alternative, let's say, funds that invest in tech more broadly, having exposure to crypto before you can get to the pension funds. So, of course, you're going to see one there, and then the same thing for the sovereigns. Maybe, there's already somebody buying and not talking about it. But I think that anxiety has to be, put down a little bit because there's, still a long way to go before we get to the maximum of the current market.
Yeah, I mean, it is still a horribly inefficient market. Why are CME futures trading at a 20% basis premium, right? I mean, and Basel rules and the cost of holding this stuff on balance sheets, it's eye-watering, so no one can warehouse the positions. So this is not an efficient market, and there's a lot of rules and regulatory structures that are making it inefficient. So there's a long way to go. I think in Europe as well, the wrapper, we talk about ETPs, they can't be ETFs because obviously crypto is non-usage eligible. And the ETN structure, or the exchange traded commodity structure that we use, that was created for gold bullion products about 13 years ago, causes a lot of confusion, right? What is an ETN? What is an ETC? What is an ETP? And we spend a lot of time kind of explaining the structure. And pension funds are used to Luxembourg funds or other kind of feeders. So there's a bit of structural work to do, I think, in terms of presenting the asset in the wrappers and the structures that the market is used to and comfortable with. But yeah, it's coming. I mean, I know German pension funds are invested in crypto ETPs. I doubt very much a UK pension fund is.
Let's just add a bit of color. So when we started this journey in 2015, there was 5 guys in Stockholm trading our products. You were probably one of them. It's from Sweden. There's 5 guys, and there was 5 million in the product, nothing going. Like, over the course of 10 years, we scaled from pure retail to probably today a client mix, which is 75% still retail. And the next 25% is like started by, at the beginning it was maybe not even 1%, but starting by very sophisticated and adventurous family office, which migrate progressively to sophisticated hedge fund, more advanced hedge fund. Ruffer in the UK was the big name to make a move in crypto very early on, before being shut down on their position by the FCA. And today you get Bevan Howard having a full digital franchise in crypto based in London. And so the move is coming, and the move is profound and transformative. You can't change your old crypto operational model, so you have to reinvent your target operational model within your own business to be able to start onboarding that. So it's a bit of a opportunity cost, because if the market is too small, then the revenue don't move the needle. We're back to this old revenue proposition. When it comes to sovereign and endowment institutional, there is much more endowment in the US than we believe, than we can believe in Europe, that are part of this journey. Actually, the US institutional movement is much more advanced than it is in Europe. And you can see insurance company, you can see endowment from universities. So Duke has a very big endowment conference 4 weeks ago, specifically about digital asset investment. Harvard endowment has been doing some moves. So every kind of endowment has been looking at it very seriously, probably under the pressure of the alumni saying, you need to look at that to invest, what is our money for the future of the university. Pension fund, you saw some firefighter pension fund, you saw some pension fund getting burned on private equity deal and VC deal, especially in Canada. They are going back to the market. They're kind of getting back in the groove. The team has been changed. We saw how some Asian pension fund get burned as well on, again, VC model, not understanding that VC can go to zero. So it is changing, and the landscape is changing quite fast. Like last night, or probably the night before, the Japanese pension fund announced they will exploring, still the word exploring, but for a Japanese government institution to say that much is already kind of a good sign that they were exploring diversification around Bitcoin and gold in the portfolio. So, things are changing, things are moving. People are realizing the value of Bitcoin in the portfolio allocation. The big allocators are making this risk-adjusted comparison and saying, oh, is my Markowitz gold old portfolio still working, and realizing it's broken. And they're looking at, okay, even if I put 3% in my portfolio, that's fantastic. The Japanese pension fund manage $1.4 trillion. If they put like just about 3%, it's about like 500 million. So you put that kind of money to work, it's right away a big movement.
Matt, a little bit of American optimism.
I would agree with everyone. It's not a step function. It's not a binary outcome. It's a slope, and we're already on that slope. Like, we're not going to wake up one day and like, oh, the institutions weren't here, and now they all are. It's going to be, I would argue, it's already growing at an exponential rate. It's just starting from such a low basis that we still talk about them not being here. But I think we'll get there. We're better off today than we were a year ago. By any measure. So I think we're making progress.
Yeah, and a good function of that is, Paul Tudor Jones in his newsletter to shareholder was saying that price are made at the margin, and that's kind of the big concept of Paul Tudor Jones. Price are always made at the margin, and when people look at Bitcoin price, they think, oh, it's a price. Actually, it's a representation of the adoption rate. You're looking at an adoption curve of Bitcoin as a function of your portfolio, and as much as the price is going to accelerate, and your eyes are not ready, and your brain is not ready to look at log scale, because that's not something we are exponential is not manageable by your brain. It's like a function which the mathematical representation is not really supported by our internal processor. So you need to put it on the paper to have a visual. But the price of Bitcoin is really this appreciation and adoption of the hyper asset Bitcoin is.
Yeah, I agree with that. I would also just note one thing that gets glossed over is Bitcoin is so small. It's $1.5 trillion. You're talking about one pension fund, same size as the whole thing, right? Imagine there were 500 conferences about the Japanese pension fund. It'd be ridiculous. But Bitcoin's so small. So even this slow ramp of adoption can have a major impact.
Maybe we're being ridiculous then.
No. I mean, that's what I mean. Like
Optimistic.
Even a little progress. That's right, optimistic. Even a little progress, I think, will have a major impact on price.
So obviously, one like the thing that needs to happen is like also more people, more advisors like distributing these type of products. Thinking about like organizations like Vanguard or Amundi in Europe who've been from not here yet. Like, what do you think is this strategy? Like, what do you think is when they're looking at the current success and structure of Bitcoin Spot ETF? Like, what's the next move for them, if any?
I think for everyone, it's ultimately a when, not an if. And the more conservative the organisation, the more franchise reputational risk they perceive, the further out on the curve they are. And it's hard to be precise as to when they're going to come in, but I've no doubt everyone will turn up.
Yeah, that's right. Vanguard hated ETFs, if anyone remembers that. Jack Bogle said they were going to destroy investors by tempting them to trade too much. And now it's the largest part of their business. So I think their strategy is to slowly take their head out of the sand, and that will happen over time.
Yeah. And index products are anti-American, right? So.
That's right. That's exactly right.
And that being said, I minor disagreement with Tim here is that the very conservative shops, they, for some banks, internet banking. It's still a thing. It's like, there's still the online experience of a bank is very bad. It's essentially, an evolution of what they had in 2002, 3, 4. And you compare that to Revolut, you say, oh, this is a proper type of experience I want. So not everybody moves at the same pace or delivers what you want. And the thing is that, they get left behind because the clients are looking for a thing. And it connects a little bit with the thing about the regulator we were talking before. Some of these folks, they think their job is to tell clients what to invest in instead of just giving the choice, right? And if we think that's absurd for maybe a fund manager, for the regulators a lot more, instead of just giving information regime and letting people make their choices. So some won't be there. Vanguard's a good example. It's not there. You have a plethora of options to get to, and I think that's what matters in the end. There will be a number of options, right?
I think just to continue on that point, in the US specifically, the big wirehouse have some very critical, I would say, due diligence steps to be able to tick the box. So if you talk to a Merrill or you talk to a UBS, they're going to be like, okay, how much AUM do you have? How many months of track record do you have? And in general, less than 1 year or 6 months, they don't even look at it. So there is like step by step. So we're not there yet, and it's still a very nascent ETF business in the US. When it comes to Europe and the rest of the world, I think for the big shop you mentioned before, like Amundi or DWS, to be Franco-German, I think the balance here is like, we can do it ourselves. We don't need anybody. We can do it ourselves, and that's kind of this from the top view that they can do it themselves. And when it goes down in the teams, and the teams look at, okay, how do we do that operationally? They're like, yeah, we can't do it. So they call people like, I say, okay, can you be a consultant for us? They say, well, yeah, we're not, but absolutely not. So, so you go there, say, oh, we want to hire you. Say, well, hire McKinsey if you want a consultant. That's not our job. And it is very difficult for this big house, especially in Europe, which are used to do everything themselves, to say, okay, we need a partner for that kind of stuff. You saw DWS making a move with Galaxy last year to get Galaxy as almost an advisory function on how to structure it, because they get the whole knowledge of how to build the ETP, but they're missing the layer of how is crypto working. So you're probably going to get DWS coming to European market, I would say, within a few weeks, if not a few months.
25th.
Oh, 25th, okay, the team has also info. It's a listed company, we should have not said that. Anyway, so DWS coming to market, but again, they're coming to market thinking they can disrupt the market. The European market is a very mature market, and it's going to be very interesting to see how DWS performance compare in Europe versus a BlackRock performance or an Invesco or a Bitwise performance in the US. Because we've been doing it for 10 years in Europe, so the market is very segregated, very segmented, very dislocated now because of the amount of product, and we saw some player in Europe shutting shop. So is there space for more than consolidation and participation and coalition? I'm not sure.
Well, I'd agree that. I mean, we've got 20 plus Bitcoin ETPs in Europe now, which is roughly 17 more than you need.
19 you wanted to say.
Yeah, I was being generous. So there's going to have to be some consolidation, right? There's just way too many products out there, and to make the maths work and stay commercial, they've got to scale. So I think consolidation is going to be a big theme this year.
And connecting with what Jean-Marie said is that the dynamics in the US are very specific because everybody had the chance of launching from the gate at the same time. And then you saw what happened with BlackRock and Fidelity. People forget that Fidelity has had the digital assets business in Europe for some time. The thing is that it's very hard to displace the first movers, displace, if you have large AUM, you have large liquidity. It's not just because you have a great brand and you have great distribution that you're coming out there and you're going to take the top position. Remember in the US, of course, Grayscale had a very specific strategy there with their fees. If they had chosen to stay at 20 bips, 30 bips, what would have happened, right? So they were the big dog, and they chose to open up those gates for redemption for some reason. You can speculate about that. But we've seen this dynamic already playing out in Europe because Fidelity, WisdomTree, VanEck, doing well, doing there, but not just because they're coming. They're getting the top spot. So it's healthy in the end, and it forces these shops to come to add something new to the table. Nobody needs another Bitcoin ETP. This is there already, and there's one important thing that it's easy to sell when you have the organic marketing machine that you saw in the US with a level of coverage never seen elsewhere. It's a lot different, launching in the crowded market like Europe is, and getting your sales guy that sells equities to go out there and sell Bitcoin if he maybe doesn't even like Bitcoin, right? So it's a completely different game.
Yeah, actually, a company like WisdomTree has an offering in the US and an offering in Europe, and the European offering has not really worked because the European market is such a crafty market. It's like a fragmented market. You speak to a German investor, he has a complete different value investment proposition than the French investor. French are the worst, by the way, because they only want to buy real estate, so it's just like you can't compete. So it's, you end up, I can't say I'm French, so okay. So it's a very difficult market to crack the European market, and quite often we see the mistake from American firms coming to Europe saying, oh, we're going to do it big in Europe, and they don't realize how fragmented is the market because they think they land in London or in Ireland and say, okay, here we go, we have a beachhead in Europe. That's not the case at all. Like, it's a very, very difficult market, very fragmented. You have to fight for every single country differently and rebuild a marketing plan, rebuild a distribution force for every single country. It's very expensive as a result because there's only, I think, 6 million investors in Sweden, for instance, so it's not a very big investment population. So you have to be able to go to this single market and address it with a very specific plan. You turn the tap in the US, all of a sudden you access this entire investment community, which is pretty dynamic with a lot of different kind of self-investment portfolio and kind of, between a 401k, between a Roth ISI and all this kind of stuff. There's like all kind of different investment, which, again, in Europe, in some country, you get some self-directed investment capacity, but most of the country, you still get a very strong, I would say, welfare state, where the state is managing most of your retirement plan. So you're just managing this kind of leftover, between 5 and 10% if you're lucky, and zero if you're French. So it's it's a very difficult market to address.
Before we talk a little bit about the other digital asset product, like non-Bitcoin product, just wanted to get your take on, so Larry Fink a few weeks or months ago said that like Bitcoin Spot ETF are sort of the first step or like financial revolution, next is like tokenization. What's your take on that, maybe, Matt?
I think there are a number of steps between a Bitcoin ETF and tokenization. I think tokenization is a long ways out, and I actually think it's going to move in the inverse direction people think. People think we're going to tokenize, and traditional investors are going to invest through tokens. I think we're going to tokenize traditional assets, and crypto investors are going to access those first. I mean, they're just so. I think Ethereum's next. I think index-based products are next. I think it's a long way to tokenization, but I love that BlackRock is investing time, energy, and resources in pushing us in that direction. Right, that's the kind of thing they can do, but I don't think we're going to wake up, next month and my father's going to be investing in a tokenized ETF. I just don't. I'd be surprised, Dad.
I mean, Larry definitely seems to have drunk the Kool-Aid, right? I mean, he's well converted now.
Yeah, I think BlackRock has been properly orange-pilled.
Yeah.
By the right intermediaries in New York. You can see that some of the element of language used by Larry on TV are really the one from the New York Bitcoin community. So I don't know if you went to the special Bitcoin bar in New York or something, but like it clearly had the right rhetoric now. So we have a good friend in that sense.
He's in PubKey every night.
Yeah.
For sure. One thing that's really interesting about BlackRock doesn't get talked about enough is I do think they internally explored private blockchain solutions. And previous cycles, they would have been, all in. That was the vogue. And they've basically wholeheartedly rejected, as far as I can tell, private blockchain solutions. And they're looking in the public blockchain space. And so I think that's both smart and a win.
Yeah, I think that's an important step in the right direction because, you go to a lot of conferences here in London and then you see all the big banks and everybody has a tokenization thing, right? And that's actually like the new blockchain. We have our blockchain division looking at things. Which is, justifying the jobs of some people, but nothing is going to come out of most of them. Like maybe 10% will actually roll out something meaningful, in the next few years. The big difference is that, this is Larry Fink. It's not, some guy in the middle of the organization saying that they have a project. So I think, and embracing the open blockchains, I think it will force everybody to understand that that's where the power is. It's not in the no closed gates in the internet, right?
But to Matt's point about his granddad dealing in tokenization, I think it's a very fair point. Like the old DeFi community, which kind of like started with yield and all these tokens who were giving yield, kind of a Deus machina force, kind of like say, okay, now we have no more yield in DeFi. We need to bring yield in DeFi. So you get all these guys saying, we went from super yield to no yield. How do we bring yield back in DeFi? And so the tokenization and the real world asset kind of movement was, okay, let's bring some stuff with yield, some stuff into DeFi world. The moment you introduce KYC, there is no more DeFi community, so it's a bit of a complicated merge of the two. And I agree, you're going to see first crypto people buying tokenized real world asset because they were looking for yield in kind of tokenizing form than the other part. But what tokenization really allow, especially in the financial industry context, is like how do you streamline your origination costs so as you can have innovation capacity, which costs you a fraction of it, so you can reinvent your entire value chain. I was talking to a big European bank last week who did this kind of exercise to tokenize a bond for a big car manufacturer. And they say, oh yeah, we went through the entire process, but we realized there was people in the organization who was moving stuff from left to right. They don't even know why. They're just doing it because the guy before them told them that's what you have to do, move it from left to right. So they completely lost kind of the reason why you're doing things and the way you do it, the reason you're doing it this way, but that's kind of stacking up cost.
Well, I'd have to agree with that. I mean, you've got to be very precise about the use case for tokenization. Right? And some people are talking it's going to solve everything. It doesn't solve liquidity. It doesn't create liquidity. Securitization's existed for a long time. Fractionalization of shares has existed a long time. So you've got to be very precise about why you're tokenizing something and what are the key benefits you're looking to gain from that. But this idea that it's somehow going to revolutionize and change markets overnight in of itself is nonsense.
Yeah, I agree. Actually, that's why I think the crypto to tokenization of real world assets is a very optimistic scenario. Because most talk of tokenization is like we have a Bitcoin ETF and then tomorrow we wake up and everything's tokenized and no one's buying a traditional fund and there's some magic in the middle. And actually the magic in the middle, I think, is like DeFi people buying tokenized treasuries. I think that's the magic in how we figure out what happens before we wrap back around, next cycle or 2 cycles down the road to mass tokenization.
You're absolutely right. But if you go back in history, in 1972, JP Morgan created Euroclear in Europe, which is your DTCC effectively. Today there is 48 shareholders. JP Morgan is just one of the shareholders, and people forget it was created by an American bank. But the gay of Euroclear was like a first step into electronification of the market. Mm-hmm. And what electronification allowed is like effectively turbocharging of distribution for the banks, and allows them to effectively distribute this product to more and more product, to more and more people. And like tokenization allows that again. Tokenization is kind of another innovation which is going to allow banks and financial industry to turbocharge one more time their distribution offering and the capacity for innovation. And that has been if you look at the history of finance over the last century, effectively is how do they distribute more and more stuff to more and more people. And even if you look at the credit crisis we had, the credit crisis was a distribution-driven problem where it was packaged for retail again. So tokenization is just there to just like push product more and more into the end user hands without, people talk about decentralization. The real world I think is more disintermediation, which is happening in front of us. Mm-hmm. And it's going to take time. It's not going to happen, as you said, it's not going to happen in 5 seconds. It's going to be 3-4 cycles down the road.
Yeah.
Moving to like non-Bitcoin products, so I think you guys all have like non-Bitcoin products. How do you see, what are the differences in strategy where you're building Bitcoin products versus like non-Bitcoin products, like digital assets product, index products, whatever? Like what are the differences in strategies in building these 2 different set of products?
Yeah, so
maybe Bruno, you want to take this one?
I'll start with that one because we started the business, and when I said it, we looked at Bitwise. The guys are doing the same thing. Is that we were index first. That was and the logic that came is that, and it's been our experience in the street over the years. Everybody has an opinion on Bitcoin. Everybody, right? So you sit down with a bank. And the term currency, cryptocurrency, is very hard because the guy's been dealing with, he's in financial markets, he thinks he needs an opinion because it's a currency. And they have a very strong opinion. But, if you put them in a position that they can be comfortable acknowledging that they know nothing about Chainlink or something, and it's very easy to say, this is tech, and you might look at cloud or AI and acknowledge that you don't know anything, but this is an important sector and worth a look. That's how we position the index, narrative over the years, which is this is an important tech sector. You should take a look at. Bitcoin is a part of it, but there's so many other things. And instead of picking winners, buy the market, right? So there's a big appeal to a certain type of investor, and it takes you out of the discussion on monetary policy and what's happening in Argentina or things like that. And especially one thing I notice is how harder that conversation around Bitcoin is in the US and in Europe, given that people don't really know what a very bad central bank is. So they think the currency will always be there and will always be great. And if Brazil, for instance, in 1989, the savings accounts were seized by the government. So everybody has this very clear idea of where the value of Bitcoin is. If you go to Argentina, even more. Here, I think in developed countries, and the coverage of crypto media in general is very US-centric or European-centric, so it misses the narrative a little bit. When you go into the broader products, it's even out of the index product. If you're talking about Ether, it's a lot easier. People like smart contracts, even though they don't know what it is, and and that applies to the other assets. So these are the segments. This is what they do, and so. That being said, we have a bit of it's an exception. Brazil is the only country in which the index products are bigger than Bitcoin and ETH. You can say it's because we put out the right narrative. It wasn't really because of that. I think it's because we put out the index products first, and that captured the repressed demand that was there. In other places, it's still a small part of, it's actually, so you look at Bitwise's fund, which is, it's a major fund, but you compare it to the size of the Bitcoin ETFs, and even if it were converted to an ETF, how much would be there? We think over time, it will be pretty substantial, pretty big, but still, it's still a very Bitcoin and ETH-centric role. Right?
I'd agree with that. I mean, when you look at the market, obviously there's huge variance in the types of protocols and what they do and why they exist. But in basic terms, there's Bitcoin and there's everything else. Right? Bitcoin is a standalone asset. I mean, it really is in a category by itself. And I think indices are important, right? I mean, how many portfolio managers in Europe are you going to have a discussion on the relative merits of competing layer ones with? It's not a conversation that anyone's ready to have at this stage. So index products become incredibly important, right? I mean, I often say it's like VHS versus Betamax, except there's 1,000 of them, and you have no idea, honestly, which one's going to win. So in that sense, I think index products are going to play an increasingly important role because this is a petri dish of experimentation, right? And there's a 200x in there, but there's a lot of stuff that will go to zero. So the only sensible way to own this market, I think, is really through index products. But the focus is on the big two. Ethereum, in many senses, is an easier discussion to have. It's a more recognizable investment case. It has cash flows. You can DCF it. So Bitcoin has always been, in a way, the harder one. It's the more philosophical discussion of what is it, why is it. The rest of the universe, I think, is easier to understand, but there's a huge information education deficit at this stage. So index products, for allocation, really will play a much more important role.
I agree. I mean, we run the largest index product in the U.S. and it's our flagship. I think if you had a Bitcoin ETF, an ETH ETF, and an index ETF all launch at the same time, I think it's a toss-up whether Bitcoin or index would have been the biggest. And I certainly think index would be significantly bigger than Ethereum. I'm super bullish on Ethereum. I think it's too small category by a factor of like 1,000. Ours is $1 billion. It shouldn't be the largest index fund in the U.S. I don't know how big the one in Brazil is. Probably.
Yeah, it's 900.
Yeah, similar, very similar. And those are the biggest in the world, right? These should be a $100 billion market. I think eventually they will be. But the access point is going to be very slow, right? We're not going to get an index-based ETF in the US in the next year, and I think we'll get an Ethereum ETF. So the access point is going to be challenging.
When? The ETH ETF?
December. There you go. That's my guess.
You heard it here first, guys.
Matt, that's an interesting point. So December without an SEC chair, because he will be running election.
Lame duck chair.
But there'll be nobody there.
He'll still be there. He just won't be.
Nobody will take decision in December.
Surely you can narrow it down. What date in December?
What date in December? Let me check my calendar. No, it's a good point on the election chair. I don't think it's going to happen in May. Is my gut, because we're not seeing back and forth between issuers and the SEC, which you would need to do. But I also think the data is very convincing, and they'll have to either reject or allow. And I think it may just be easier not to create a lawsuit hassle for future chairs. But it's a good question. I'm not 100% confident.
Yeah, and
I think come July, everybody's on holiday. They're all working on presidential campaign, so they're not going to be deciding in September.
That is kind of true, but they have to. They have to write disapprovals. There's like a calendar basis. They have to answer them.
There's one important cultural gap there, Jean-Marie, is that vacations in the U.S. are like 15 days tops, and they're spread out the year, so people will be working there. In
15, try 10.
But I think the second thing is the same thing, that we have a filing there. It's just getting zero comments, so we don't think it's happening. My personal take, that depends a lot on who's elected. It looks like it's Trump. Remember, the big difference in the last time wasn't that the filings were there; it was the lawsuit. The lawsuit was because we would still be trapped in the back and forth, right? I think Grayscale had a big incentive on. So this is my personal impression of getting the conversion, because they had their own position locked in Grayscale in GBTC, right? So having an exit for that without blasting up the fund open was strategically important for them at the time. With ETH, why would you come with a lawsuit if the outcome is the exact one that we're seeing now, which is your big fund bleeding and the others, taking the asset unless you. And so, we know how much money we can spend in U.S. lawyers. It's I'm not going to put man in the spotlight and say, are you willing to be the one that's taking that lawsuit? Like, I can talk for Hashdex. It's not us, So if somebody wants to, take the SEC to court to discuss that, the case in ETH is the exact one as Bitcoin, you'll get probably to the same result. Even with the whole correlation discussion happening, I think, in the end, it's the same thing. The Ether ETF should be there. But we can really get trapped in a situation that, Gensler sits on top of it, doesn't allow it. I don't think he stays. Even if Biden wins, I don't think he stays. And then whoever comes, if it's still under, Elizabeth Warren mostly, we're going to stay in the same kind of, strange scenario until a lawsuit is there. And I think somebody should propose it. If somebody wants to,
For 20 basis points.
If all the issuers want to split the bill, then we can talk about it. Right? We're not doing it ourselves.
Just maybe to wrap it up, last question, just to talk a little bit about like infrastructure provider. So we've seen like a pretty big concentration of infrastructure provider. Like I think on the custody side, Coinbase is doing custody of a lot of like the Bitcoin Spot ETF. It's not the only one, but they're doing a lot. Like we've seen BNY Mellon also doing like fund admin of a lot of them. Like, what's your take on concentration of like infrastructure provider? Like, would you think that we're going to see more diversification in the future, and why do you think we've seen so much concentration in the first place?
I think you'll see more diversification on the custody side for sure. I mean, BNY is a pretty gold standard name to have on the list, so I think it's a great lead. The realpolitik of why most people chose Coinbase: A, they're the largest; B, they do a great job. And C, if you wanted to sell into national accounts like Morgan Stanley, Merrill Lynch, UBS, et cetera, they need to do diligence the custodian as well. And so there's a natural inclination for everyone to line up behind one, because otherwise they'll tell you that it will take a little bit extra time. And so as the market matures, I think that becomes less true, right? As more of these custodians have gone through due diligence at the national accounts level and they're more comfortable. And so I think that will diversify, and I think costs will come down. But I think that was a big driver of concentration.
Yeah, I mean, in Europe, we don't have the same issues. There's reasonably diverse range of offerings at the custody level. We all have different solutions and multiple custodians. Where we do have a concentration issues around market making and liquidity provision. There's a limited number of players, and it's been they do an excellent job, but there's a small number of players providing liquidity across the ecosystem, especially when it comes to being registered market makers. I mean, there's only 2 shops in Europe that will do that. So that's probably the most acute sort of area of supplier dependency, I think, in the European model.
Bruno?
Yeah, I think it's always been the case with the, if you look at any of the specific service within like the fund stack, we've never had like a plethora of options. It's always been 2, 3 this, 3, 4 that, 1, 2 here. I think it's getting better. The brands are better. You don't have to choose in the past, some small firm that you never heard of, but they look like they know what they're doing. So certainly if you look at, the stack behind Hashdex products or Bitwise or CoinShares, back in 2018, 17, 19, today is probably a lot different, a lot better than it was. So I think, it's a natural good progression, and not particularly, concerned when the custody side, as Tim said, it's full of options. I think going back to something Tim said in the beginning, still banking is still an issue for a lot of the crypto companies in general, going beyond, but it tends to normalize. So it's I think the US ETF is a big part of that.
Jean-Marie, any take on infrastructure provider, service provider?
I'm not going to repeat too much of what has been said already, but the concentration is there and will slowly but surely be removed. Also not to forget that ETF, despite looking extremely clean, for an investor are extremely complicated machine. Under the hood, it's like high complication watch. There's a lot of of people participating in the creation, redeem, and the administration of this process. And it tends to be very specialized shop who interact with that. So Matt was mentioning Bonnie. Bonnie has kind of a very, very high track record in ETF world. So having them on all the ETF is not completely out of order, or most of all of the ETF. You know, in Europe we get Notabene as a trustee, which is kind of the go-to trustee for all this structure, whether you are crypto or not crypto, by the way, because they understand the ETC structure better than anybody else in the market. So you tend to have this kind of key player which are specialized in the ETF, ETC, ETP segment, and come back, and that's a complicated one to remove, but they are the gold plate or plated partner or sponsor for this kind of thing. So having them on the ticket is kind of encouraging that the recognition of this product and I would say the adoption and is getting there. So if you were just using obscure partners, it would not be encouraging in terms of adoption. So having this kind of stuff help, as Matt was saying as well, due diligence, help investors to feel comfortable because that's names they recognize. You know? And if you look at the law firm who drafts the US ETF, there's not like as many law firms as there is ETF applications. It's probably like a third of the law firm who were all bidding us the same money for kind of doing the same job 3 times or 4 times. So, you know, it's a very concentrated market by default.
Hopefully Cryptio will play a big role on the reporting and accounting side. Thank you very much, guys. It was an absolute pleasure. We'll take a few questions from the audience. Yeah.
Hi, I'm Jacob, CEO at Winter. How do you size the market for Bitcoin products and index-based products? I'm thinking about Europe and the US because we have 2 from Europe with assets mostly in Sweden and Germany, and 1 from the US and also LATAM. So we have billion-dollar asset managers. Matt, you talked about hundreds of billions of dollars in maybe your Bitcoin ETF or collectively. I'm thinking about all the products, all the asset managers. How do you size the market? What will the AUM be? How do you think about that?
I think there's, I remember, you know, back in 2018, we were meeting a team of devs from Salt Lake City or something. I say, oh, what's the biggest risk for the industry? Is the regulation and things like that? I say, no, it's like, it's you guys not delivering. It's like, you know, there's only so much we can do in terms of pushing the narrative of, you know, this is a big future, these things are coming, these projects are good, these are like, you know, startups but liquid. If the projects deliver what they can deliver, you know, their market cap will be incredible, there will be interest in investing in them, and then the index products, they become huge, right? If what we look for, if, you know, in the end, what you have is, you know, Bitcoin being Bitcoin, ETH doing its thing, and maybe 1, 2 projects, but the rest kind of failing out, then, you know, then the index, they stay smaller, right? But, so it depends in the end of the real importance crypto will have in the economy and society, like in 3, 5, 10 years. And I think this is the cycle in which these projects have to come to fruition. First, for a lot of reasons. People raise a lot of money in the froth of, you know, 2020, 2021, 2022 or so, if they were lucky. That VC money is never coming back again, not in those levels, right? So if you had the money, you had the project, and you still haven't delivered, like this is probably your last shot to do it. And new projects coming in, they won't have, you know, that thing. So these players that we're seeing, the ones that we know, let's say, you know, take the top 50, 100 projects, the answer lies on them. You know, if they can come out with things that are really changing and giving a run on, you know, Amazon for, you know, I don't know, file storage or whatever, then you know, the market will be a lot bigger than Bitcoin. So it depends on the end of, you know, if the crypto promise actually becoming something. Otherwise, we'll be just, you know, Bitcoin sellers. So.
Anyone else?
Hi, I'm Kat from Gemini. We are a custodian for ETFs. We are a custodian for the VanEck ETF. We're trying to grow in Europe as well, and we also offer execution. what we've seen is that there are lots of custodians which have a reputation in the TradFi world, and it seems like they're winning the market share. However, they're not very much capable of servicing indexes, very complex structures when you're dealing with altcoins. So when it comes to a selection of a provider, what are the key differentiators that you look at?
Well, I mean, I've done more due diligence on custody products than anything else in the last 3 years. What a fun life I have. But it
Exciting.
It's super exciting stuff. And it is harder than a lot of people think, right? I mean, if you have clear benchmarks, it has to be regulated. It has to be cold storage. I mean, without that, it's very hard, obviously, to support a listed, regulated product. And slowly your data set gets shorter and shorter. And then you look at, okay, well, how many coins can you support? And that's still a big problem, right? People say, oh, we support 95 tokens, and 94 of them are ERC20 tokens, and that's not particularly helpful. So when it comes to the layer ones and really moving down the list to support index products, that's a small list of custodians. I do find a lot of custodians started life as tech companies, and it's all their own tech. And that ends up being a millstone around their neck. I mean, I like custodians that are custodians that use industry-leading tech. I like to separate the two because then actually the model is more flexible. That ultimately, if you're using, say, Ledger or Fireblocks as underlying tech, then it's more likely that that is going to develop at the speed of the market. And custodying assets and safekeeping assets is a skill set that you apply on top of that. But it's difficult. Operational processes have to align extremely well with what we do around create redeem. It's a process we all take extremely seriously, as you can imagine. The breadth of coin, the ancillary services around settlement and potentially lending or other financing activities. So it is quite nuanced, and the number of really good, fully functioning regulated custodians is a very short list.
And you didn't speak about staking and pricing.
Oh yeah, I didn't even go there, but you're right. I mean, the full package is a rare beast indeed.
We've got one more here.
Hi, Vedlana. I'm a product manager at One Trading, which is an institutional exchange based out of the Netherlands. Question actually on staking, funnily enough. What do you think about the recent development of staking being included into the Ethereum ETF applications? And do you think it makes it much more complicated or not that much more complicated for the SEC?
You can speak about it.
I can. I don't have a filing, so I can speak about it. I think it's like shoot for the stars and you may hit the moon. I think that's the idea behind that. I think it makes it more complicated. I would guess that the conversation went somewhat similar to the conversation on in-kind create redeem, which was like you're in the room with the SEC and they tell you, it'd be really interesting to have a discussion around in-kind create and redeem. And if you want to have that discussion, we'll get to approving your product in 6 months or a year. And so no one has that discussion. And I suspect that will be similar around staking, but I could be wrong. We have seen multiple people add staking and emphasize staking, but my gut is that they're reaching for the stars in hopes of hitting the moon, at least initially. I think we'll get staking after an ETF down the road. But that's just one opinion. I could be wrong.
No, I agree. I think there's one thing when you're sitting down with regulators, you have to put it in a position that it's, comfortable enough for them to approve something and very uncomfortable for them not to approve. So if you're giving them excuses to not approve, they will take it in most cases. And I think staking kind of fits into that. Although, we industry know that it's better for the product, there's no increased risk, we manage, I think all of us have products with staking in them. But from the regulator perspective is, actually, how does this work? Is this, and then you're creating some novel legal issue around that specific thing, right?
Yeah, I would just build on that. One really good thing to think of if you're trying to put yourself in the mind of regulators, which I think people in the crypto industry don't do a good job of, is that they worry about unknown unknowns, right? Like what's the risk with staking? I don't know, but I don't know that I don't know that I know what it is, and therefore let's just push it off. And thinking about that sort of unknown risk really gives you a good window into how regulators think.
There is a risk differential, right? I mean, there's obvious liquidity risks around staking, and it's all correlated wrong way risk. You know, the day ETH collapses is the day. So, you know, we can't ignore the fact there is a different risk profile here, and that's not necessarily easy to structure around in terms of designing products. But it is an additional risk factor, and I think the idea that the SEC is going to take this big bold step in one go is kind of unimaginable.
One last question.
Okay, put your hands up again. I didn't see.
Thank you. This is Jack. I'm curious, given that there's a wide range of products, including publicly listed ETPs, there's private QPs only or AI only alts funds or index funds, and in the future there could be proof of stake yield incoming fund, right? Multiple products under the same roof. Curious how you guys come across or decide tech providers. Would you pick the same traditional ETF trading stack, fund stack, or would you sort of combine some best in class in crypto and then sort of bolt on to the traditional tech stack?
Do you work for Gemini as well?
No, I don't.
No, just checking.
Yeah, I mean, just the various components you need, right? I mean, back in 2019-20, it was just finding anyone who would perform the functions you require. Some of them are very TradFi in nature, the trustee administrator type functions, the control functions. And that's where you want traditional, well-recognized names who do risk for a living. When it comes to the tech stack, obviously, it's much more specialized. But yeah, I mean, that whole space has evolved the whole time. I mean, we're continually looking around. I think, you know, single supply dependencies at this stage is very dangerous. So we try and avoid any, you know, single points of failure or over-reliance on any one supplier. You know, you've got to keep optionality in a market that's evolving at the speed this is. But then you've got a lot of mouths to feed, and it's difficult to maintain those relationships. So it's always getting the balance right in terms of operational risk. But yeah, I mean, spent a hell of a lot of time doing due dil on various suppliers at key points of the process.
Yeah, just going on one point to Tim, everything Tim says is absolutely right. One stuff which is striking to me, and I think very important for CoinShares, and Michael has been working with me on that for a long time, is, you know, some business provider and, you know, tech provider and have been very, very early mover and put the business at risk for working with us back in 2016, 2017. And for us, there's a function of loyalty as well to these people, because if you don't reward in the long term, these people who take the first risk, and the day you get a Goldman Sachs showing up, you say, okay, goodbye, I go with Goldman Sachs, then you're not encouraging these people in the future to take a risk for something else. So, you know, in a very, very blunt way, you know, we started with like some prime broker in the early days, which were like taking a big risk on us with this, you know, they were like giving us like minimum revenue per month. And by 2021, we were the biggest customer. And then at that point, yeah, you get Goldman Sachs or Morgan Stanley knocking at your door saying, maybe you should come with us. And you can on this kind of, okay, maybe it's good for our brand to get this kind of great lamppost above our door saying we are banking with Goldman or a top institution. At the same time, say, well, I'm abandoning the guy who also helped us get where we are. And it's a kind of a very, very subtle balance to manage, because you want to make sure the industry keep innovating and keep taking risks. So you want to keep rewarding these early movers and these people who were with you at the start of the adventure. So, you know, the newcomer is not always the guy who gets the business. And at least at CoinShares, we value long-term partnership and loyalty to brands.
Yeah, I would agree with that. I would just add also, I think you're seeing asset managers choose best in class. I mean, we use 4 different custodians for different funds, and we have specific reasons for choosing each one for each fund. And I think you'll see that. But I do think you'll see at least crypto native firms try to honor those long-term relationships as this industry matures.
Yeah, and I, you know, adding to what you both said is, you know, Coinbase was mentioned here as the custodian. The thing is that they were able to not only keep up with what was happening, but actually delivering the things that we all needed. And remember, Coinbase didn't have their institutional custody business was very small, and then they bought Zappo, and we custody with Zappo. And I remember we built a lot of tools that we needed with Coinbase at the time so that we would have the type of controls and custody that we wanted. And they understood what it took, what was needed for, the institutional grade things that we were all looking for. And sometimes I think some of the entrepreneurs in the sector, they tend to be like very, very tech focused and looking at things, and sometimes miss, particularly talking about the funds and ETFs, the capital markets component and what it looks like for us and the types of risks that we're running. So you need to have both things. You need to have that acumen to understand like where we're coming from and the types. We can't really take risks. You can't go back to a client and says, I think we were talking about this before. It's like diversifying custody. Oh, it's okay, nice and dandy, but if you lose $1 of your client because there's no, you're calling the private bank and say, hey, actually I lost $10,000 here in the custody problem. That doesn't exist. It's not your personal stash that you can lose a little bit and say it's fine, right? So we have to be really paranoid with those things. And of course, we'll take risk and reward the guys, but we also have a fiduciary duty to protect client assets, right?
Yeah, on this Coinbase point, I think people say, oh, Coinbase is trusting all the first place here, and people don't appreciate that Coinbase has been instrumental in this SEC win, because without Coinbase kind of like sprinting between effectively the 1st of December to whatever the date of the launch, with a 200 people team dedicated to that and their balance sheet, because without Coinbase balance sheet, the create redeem is like hurting a lot for a lot of issuers, then you don't go to market. So there's a lot of function here around the tech provider and why they are on the finish line, which tend to be a bit obscure for people, but when you dig in and you look at everything Coinbase has done for the industry, I met Brian Armstrong back in 2014 in Amsterdam. It was just the first Bitcoin conference I was going to. And Coinbase was nothing, and today this kind of giant of crypto. But a reason the SEC approved it is, despite having different legal issues with Coinbase, it's like Coinbase was on the ticket and be able to facilitate this whole kind of custody with GNU and all the infrastructure around creation and redeem, which he also understood. So, if anything, we should thank Coinbase for being in this kind of race with us, because otherwise we won't be having an ETF as it is right now in the US.
Cool. Guys, thank you very much. It was an absolute pleasure. Thank you all for coming, and have a wonderful day.